Of course, this is not financial advice and for entertainment purposes only. Here's the best ETF to add to a 3 ETF portfolio for long-term investing. Investors, we all know about the famous 3 ETF portfolio, a S&P 500 or a broad market ETF, as well as a dividend ETF and even a growth ETF is great for building long-term wealth and great for just long-term investing. With myself, I do have a 3 ETF portfolio with SCHG, VOO, and even DGRO. However, I think it could be way better with an ETF just like the one in this video called BTGD by Quantify Funds. This fund is pretty much out of this world because it combines the power of both Bitcoin and gold for a well-diversified and even a high-growth portfolio with an existing already 3 ETF portfolio just like the one that I have, and honestly, I think it's a super sleeper and underrated fund in this video. So then I reached out to Mr. David Dziekanski, the founder of Quantify Funds, to talk everything about his insane ETF called BTGD, which combines the power of both gold and Bitcoin all in just one ETF, and it's crazy. So in this video, guys, we're going to interview Mr. David Dziekanski, the founder of Quantify Funds, to talk everything about BTGD, the case for Bitcoin, the case for gold, and why it belongs in a well-diversified portfolio just like the existing 3 ETF portfolio. And right now, guys, BTGD is beating, yes, I said it, beating Bitcoin, beating gold. And literally, if you had this ETF, you're doing super well with an existing 3 ETF portfolio. So good luck and you're going to enjoy this video. So please, if you will, welcome Mr. David Dziekanski, the founder of Quantify Funds. Who released an ETF called BTGD, their Quantify Funds, 100% exposure to both Bitcoin as well as 100% exposure to gold. BTGD is the first ever ETF to combine exposure to these 2 distinct asset classes of Bitcoin and gold while addressing traditional leveraged ETF laws through active management and innovative rebalancing. Now, first of all, David, how are you feeling about being on the channel and about BTGD's performance right now and just so far lately?
What a fantastic intro, Marcos. Thank you so much for having me. You have such a phenomenal channel here, and the content you put out is such a top notch, and I'm just very excited to be here with such amazing other counterparts in the ETF space. I've been in ETF management for about 20 years and ETF product development for now about 13. I spent 11 years with Tidal prior to founding Quantify Funds. So it's just amazing to see the coverage of all these new, unique, interesting ETFs really get real coverage from the retail space. You'd be surprised. I actually think, retail is doing a lot more research that advisors just aren't doing. They just don't have the time in their schedule to do. And they just tend to just say, okay, let's outsource it through an OCIO model with BlackRock. And you end up in just very broad, basic BlackRock ETFs. But there's so much innovation that's happening in the ETF space, specifically because of the rule changes that started in 2020 and 2021. And so kudos to you. You have an amazing, amazing channel here, and I'm very excited to be on it today.
Can you provide a brief background on yourself as well as Quantify Funds and why you guys launched BTGD for investors?
Yeah, so I was a triple major in math, finance, and economics from Washington University in St. Louis, and I went straight through to get my master's in quantitative finance. From there, I was a portfolio manager of ETF model portfolios up to about $1.8 billion for a company at the time called Ladenburg Thalmann that rolled into a firm that's now called Osaic. Back in 2014, I actually joined Mike Venuto of Tidal Financial Group, which at the time was called Toroso Investments. And we were managing portfolios of ETFs. We had a mutual fund of ETFs. And honestly, the logic that leads me from that moment to BTGD and Quantify Funds makes sense all the way through, because with quantitative easing in the 2010s, what had always scared me was scarcity. Like, there was no scarcity of currency. And it really all came into fruition in 2020. But whether it was land or land stocks or gold, or early on in Bitcoin, it was looking for things that had supply constraint. Real estate doesn't have supply constraint. Land has some supply constraint, but really in the world of infinite printing, trying to find assets that will hold their value because they just can't have the money printer turned on. And that's where the inception of BTGD, the Stacked Bitcoin and Gold ETF, came up. By the way, you did a phenomenal job explaining it. I love the name. It's a mouthful for sure, but you did a fantastic job there.
So for every $1 invested into BTGD, you get exposure to Bitcoin and gold. My first question is going to be, can you go over the methodology and investment objective of BTGD for investors?
Absolutely. So you summed it up very well in the beginning. The whole methodology is to gain 100% exposure to Bitcoin and 100% exposure to gold in the same ETF. That can sound very confusing at first. You can think of it as a portfolio that is half Bitcoin and half gold times two, right? It's just a 2x basket of a 50-50 portfolio between the two. And then we will rebalance. It is an actively managed ETF, but really we're not trying to, follow any momentum trends, et cetera. We're trying to efficiently offer 100 to 100% exposure. And so we rebalance generally around a 5% drift. And so we'll let the assets drift a little bit, and then we'll rebalance between the two. And that's why when you're stacking assets to create what we like to call almost like institutionalized leverage ETF, you want to choose two that have diversification benefits. And the long-term diversification or correlation between Bitcoin and gold is right around 4% over the last 10 years. So it's really low. And that means that you have an opportunity when one asset is falling that the other one can actually be rising. We know from basic math from a 60-40 portfolio that the rebalance itself adds so much alpha potential to your portfolio on a risk-adjusted basis and on an overall basis. And this is not like a 60-40 portfolio between the two. You get 100% to both. And so the diversification really compounds and allows us to avoid some of that decay that you see in traditional leverage ETFs. There's actually nothing wrong at all with traditional leverage ETFs. You just have to actively rebalance them. You might need to trade a leverage position in your portfolio 3 or 4 days a week just to get your intended leverage target. We take some of that onus off of you and bake it into this ETF, all with the theme of scarcity and like prepackaged currency debasement hedge.
Diversification, that was a super great point you said. People would say, okay, why not just hold only Bitcoin or hold only gold? But with BTGD, you hold both. So what's the benefit of combining gold with Bitcoin?
Yeah, so if you have no leverage on your portfolio, you quite frankly probably don't need this ETF at all, but you'd be surprised how many of these ETFs that you have are actually embedding some amount of leverage in your portfolio. So it's just a question of where you get it. The best institutions in the world run a portfolio with some amount of leverage, right? It might be 10%, 15%, 30%, a conservative amount of leverage. And they're not necessarily leveraging the same assets. They're looking for diversifying assets. And so we're just taking two of those diversifying assets and prepackaging it into one ETF. And what I would also say is, we don't anticipate taking the entirety of someone's Bitcoin or gold exposure. They'll probably have both Bitcoin and gold outside of this. But are you making those really difficult trade decisions during the turns when Bitcoin first hit 108 in December? Were you trimming it and adding to gold after gold actually was trending downward for 3 months? And then gold went soaring from there and Bitcoin toppled to below 80K. And were you then selling your gold and buying a little bit of Bitcoin? And if you are, and you're capable of actively trading your leverage ETFs on a regular basis, like kudos to you. But I find that people don't always want that onus put on themselves. And that's why we actually legally don't have a disclaimer in the prospectus. Like all leverage ETFs have to say, this is just intended for daily use. We do not have that disclaimer. So we actually market this as leverage for the long run. So this is a good allocator's tool set to use for a little bit of structural leverage in a very intelligent wrapper.
To my understanding, you guys are trimming Bitcoin when it has a huge rise up and then adding more gold. So are you guys really trying to get that exposure to investors to get like the best performance possible out of these two assets?
So every day you should wake up and it should be pretty close to both 100 and 100. And so all that means that if you had a leveraged, for example, Bitcoin position and it just kept running, you'd have to trim it. And if you didn't trim it, you'd have over 2x, right? We're doing that trimming for you. So it's not like you wake up any given day and you have less than 100% exposure. We're just not taking that asymmetric upside and we're doing that little trims there and we're doing those rebalancing for you. And that's the same thing on the downside as well.
Is that IBIT, a Bitcoin ETF, is up over 20%, and Bitcoin is up over 20% as well, but BTGD is up over 40%. So you're getting outperformance with BTGD, with gold, and even just that Bitcoin exposure. Why is this outperformance happening? It's super crazy to have a Bitcoin ETF with gold outperform a Bitcoin ETF and just holding traditional Bitcoin.
No, it's a great question. I would say you can anticipate our returns to be the price of Bitcoin plus the price of gold minus essentially T-bills, right? We don't actually use leverage in this fund. We're accessing leverage through futures, but the cost of leverage within futures is essentially the T-bill rate. So that's where the, $1 invested gives you $1 of one and $1 of the other. $1 invested gives you $2 of exposure here. So the returns should be Bitcoin's returns plus gold returns minus the cost of leverage. There's still some variability based on like rebalancing and the correlation, et cetera. But like over the long run, you'll see we generally trend to pretty much those numbers exactly. Cost of financing under 5%. And that's really the other benefit you're getting from all leverage ETFs, or at least some, depending on how they're structured is, if you're taking out margin on your account, what rate are they going to charge you? You're not getting charged less than 5%. So this is under 5% margin structured into this ETF. So it's just a very cost-effective way to do that.
When we're thinking about the ideal investor for BTGD, what type of investor is BTGD for? Is it a higher risk investor, somebody who wants growth, somebody who wants Bitcoin and gold? Is it somebody looking for a diversifying ETF?
Wow, I think all of the above. You nailed pretty much all of the categories we are looking for there. Obviously, if you're going to have some form of leverage, you're going to be a relatively aggressive investor. Even just a growth investor might choose to have some amount of leverage on his portfolio. But where we fit both in the Bitcoin camp, in the gold camp, in the alternative bucket, fitting very well next to equity portfolios. Over the last 10 years, it's always been, how do you get something that's different from the equity universe without underperforming the equity universe? So I envision this as a very good tool for people who have allocated to just Bitcoin and not gold to get their first taste of gold without sacrificing their Bitcoin, and vice versa. Gold is also at or near an all-time high, and gold bugs, rightfully so, feel justified in their allocation. But if you're getting that itch to allocate to both, this is a very good tool that doesn't sacrifice one to give you allocations to the other.
The future of Bitcoin, this is not Quantify Funds perspective. This is not your client's perspective. This is just your perspective and thoughts. So what are your thoughts on Bitcoin for the future? And should investors be looking to add Bitcoin in their portfolio? And can BTGD be that ETF to add to their portfolio for Bitcoin exposure?
Well, as you said, please speak with your financial advisor. This is not financial advice. But what I would say is, I'll start with, I guess, the investment case for Bitcoin and gold, and starting with Bitcoin, or the commonality is between the two is their mining rates. So Bitcoin, post-halving last year, mines at 86 basis points a year. That's 0.86%, less than 1% new supply of Bitcoin a year. Gold mines at about 1.75% per year. That number has been generally about the same number for the last 10 years. It really takes a lot of time to you're not going to be like, oh, all of a sudden we're going to let's discover some unfound gold mines and speed up the rate of production. It takes years for production to catch up to anything like that. And paper currencies are going to continue to print at a 7 to 9% rate. And then you say, well, both of these assets are at or near all-time highs. So are stocks, so are real estate. At what level do people own these assets in their portfolio? And while everyone's talking about Bitcoin and gold, the institutional world still has actually relatively low allocations to both. Actually, 1/3 of all gold that's mined goes directly to central banks buying gold, right? Because central banks are huge buyers of gold, especially in the world where other central banks don't want to necessarily own and hold the US dollar or debt in as great of a quantity. So they're looking for alternatives. And the institutional world hasn't yet really fully adopted Bitcoin. The advisors, there's very few institutional firms that actually allow their advisors to allocate to Bitcoin at discretion. And the ones that have just turned it on in the last 3 months. And I do think there's going to be a domino effect there. Obviously, that doesn't mean that these assets can't have volatility. They will absolutely have volatility. But over the long run, supply and demand matter. When Bitcoin had a 15% mining rate, it was a totally different asset. It's mining at less than 1% a year, and that's only going down from here. You have the ETFs gobbling up assets. You have the treasury companies gobbling up assets. You have the institutional world slowly increasing their allocations. And I think, with any suitable high volatility investment, if you are at zero in any of these and it's suitable for you, maybe dollar cost average in and, spend 6 weeks, 8 weeks just slowly building to a position that you feel comfortable with.
In terms of, like you said before, dollar cost averaging, is that like the best way to invest in an ETF like BTGD? Because you are holding exposure to Bitcoin and gold, which can be great assets to dollar cost averaging for the long term, because I know on your website, and BTGD is a long-term holding ETF.
Yeah, I think any high volatility ETF should be dollar cost averaged in. You don't want to just turn a light switch and move like large percentage points of your portfolio over one time period. Even though these assets are near or at their all-time highs, the supply and demand dynamics is the one thing that will just never really change. And so they'll have periods of like being a little bit inflated or trail sideways. But in the long run, we're just going to continue to print to get out of this deficit issue that we're in. And again, we're actually literally borrowing dollars. We're paying some level of financing to access leverage through the futures markets. And so we're shorting dollars and leveraging Bitcoin on top of each other. So it's almost like a sped up way to take advantage of that like debasement that's going to occur.
So BTGD is crushing, like I said before, IBIT, any gold ETF, any Bitcoin only ETF, you guys are crushing it. My thoughts are, why is BTGD outperforming both these asset classes? I know that gold has been on a tear lately, Bitcoin as well. Your fund, I'm pretty sure you're pretty impressed with the performance, so I want to hear all about it.
Yeah, I mean, again, the performance comes from two assets with a little bit of leverage that have positive returns. And so since we launched both gold and Bitcoin, I think gold is in the 20s and Bitcoin is in the 70% return. And we're up about right in the low 90s between the two. And so that's the beauty of stacking assets like this. Like, you don't have to choose between one or the other. Even if you're diversifying a portfolio that's 50-50 two assets, you're making a choice between those two assets. And there is obviously some increased volatility by using a little bit of leverage here. But if you look at, we actually have a chart on our website called the Case for Bitcoin and Gold on the BTGD page of Quantify Funds. And on that, we have a really nice risk return chart that shows, gold ETFs, Bitcoin ETFs, BTGD, leverage gold, leverage Bitcoin, MSTX, MSTY. And you can see, even though our leverage is allowing us to achieve very strong returns compared to the rest of the group, we only have just a little bit more volatility than Bitcoin. And I think that's like the key point. We are adding returns, but we aren't necessarily just adding the two's volatility on top of each other. So, we said the return should be Bitcoin plus gold minus, some cost of financing under 5% a year. But the volatility is not Bitcoin's volatility plus gold's volatility. And I think that's the beauty and the magic of this. And again, you can recreate this with leverage ETFs. If you own the two leverage ETFs and you're just always rebalancing every single day at like 3:30, you can do that, but you need to become your own trader there. And you're going to have to make some very difficult trades and some very difficult buys on the asset that's performed really, really poorly, sometimes for like 3 months in a row, especially as we've seen with these two. They've kind of teeter-tottered and taken their turns performing. And so this kind of alleviates all that stress for you.
Speaking about stress, some people might say, okay, why don't I just hold a Bitcoin only ETF, like let's say 5% of my portfolio, and then 5% to a GLD, IAUM, a gold ETF, versus something like BTGD, which holds both. So my question is, for investors who want to hold this ETF that say, okay, I'll hold a gold ETF and a Bitcoin ETF outright versus BTGD, and why I'd say it's going to be like less stressful and easier to hold your ETF because you get the best of both worlds all in one fund without having to trim and rebalance and time which one is going to perform the best. So I'm going to throw it back to you.
Yeah, if you're a growth investor and you have a benchmark that's primarily equities, you need to find ways to have diversification in an efficient way. And so BTGD, a leverage Bitcoin and gold ETF, allow you to, in an efficient way, get a little bit of structural leverage, but not as much risk as it would be for holding those positions individually. Referencing that paper again, the case for Bitcoin and gold, on page 2, we have a chart of the Sharpe ratio of BTGD versus gold, 2 times gold, Bitcoin 2 times gold, Bitcoin, gold miners, leverage gold miners, MSTY, MSTX. We have by far the highest Sharpe ratio because, again, doing this like leverage diversified basket just increases your your potential for returns and limits the amount of risk you have, that as independent of if you had just owned the 2 assets individually. Actually, page 3 of that presentation actually shows a very interesting chart of Bitcoin drawdown. So every time there's a 15% drawdown in Bitcoin, how does gold perform? And that is, again, in a nutshell, where that risk reduction is coming from. You get a lot of volatility on the upside, but when Bitcoin is really having struggles and having big drawdowns, gold's held up very, very, very well, and has been pretty much flat during that period. So it almost feels like you have almost like double the exposure on the upside and just the exposure of Bitcoin on the downside.
I saw on the Quantify Funds website for why BTGD, a currency hedge, a currency like defense ETF, if you will, and a market buffer against volatility through Bitcoin and gold, which is what BTGD holds. I'm going to throw it back to you.
Yeah, I mean, gold historically has always been a really good diversifier for portfolios. And even especially post 2020, when bonds lost their correlation benefits to stocks, gold has very much become the asset class of choice to have like a defensive asset. And again, everything is tied to the money supply growth. It's definitely important. Now, Bitcoin is in a moment now where its correlation is almost split between the money supply and gold. And you heard that right. Like, Bitcoin is definitely more correlated to gold today than it was 5 years ago. And that is almost a good thing in my eyes. Everyone asks, like, when will Bitcoin act as a defensive asset? And I was like, at a much higher price, right? When it gets to a much higher price at some point in the future, it will start acting more like you see gold act. But really, the bet is that it's becoming more of a defensive asset over time than tied to M2 versus other assets, because, you know, they can always issue new shares. They always have stock options that have to dilute shareholders, et cetera. But like, none of that is happening in the Bitcoin and gold world. So they can always dilute your equities. They can always build more real estate. Again, looking for those like true scarcity assets. I'll also point to, I know Bitcoiners sometimes look at gold and laugh it off as like an asset that, like, yes, you know, maybe it held your value over the last 100 years, but it didn't grow your value. But we actually think that that all changed in the early 70s. And as soon as we went off the gold standard, gold actually became an asset that actually has a positive real return since that moment in time. And that makes perfect sense. So before that, yes, one house in 1960 cost the same amount of gold as it cost in 1860. Right, but post 1970, when we got off the gold standard, gold actually started becoming a real return generator in your portfolio.
Adding a Bitcoin or a gold ETF, maybe even BTGD for investors. I know so many people who watch my videos, and even myself, have only the S&P 500, maybe only growth ETFs, broader market ETFs with no Bitcoin and no gold. In terms of building a long-term growth portfolio, are investors who don't have any gold or Bitcoin, especially Bitcoin, leaving out maybe like returns on the table long term?
Yeah, I mean, you know, leaving out potential for returns and also potential for diversification. I am by no means saying that you shouldn't own equities, especially if you're an aggressive individual, especially if you're earlier on in your investment career. You absolutely need to allocate very heavy to equities. But you need other assets that, again, have positive returns and have some diversification benefits to that beta that you're getting from equities. And you're hearing it from everyone, whether it's like Paul Tudor Jones, Ray Dalio just came out with a piece yesterday. It was basically like stocks, gold, and Bitcoin. Like a lot of the institutional world and the minds that we listen to are coming to the same conclusion at the same time right now, that, you know, we're in this deficit and debt situation that our best case scenario is we pray we have 3% inflation and AI completely outpaces that. And what does that mean? That means that like our dollar is going to erode at a very quick pace, and that's the best case scenario, right? Again, they can't print more gold and they can't print more Bitcoin. It's not that these assets are like the greatest things in the world. It's just that they actually have real scarcity.
In terms of, I guess, like a lower volatility product, so will BTGD be like lower volatility than holding only Bitcoin or holding an only Bitcoin ETF? Because you do have gold as kind of like that hedge. BTGD is like less risky, a touch less, because you do have that commodity of gold, which is like that safe haven asset during market turmoils and whatnot.
Yeah, so nothing's free in this life. So we definitely have a little bit more volatility than Bitcoin. I'm actually going to reference the paper right now and give you the actual number. So our annualized standard deviation since inception, closing 7/31, was 51.99%, and IBIT was 47.41. So we have slightly more volatility than just IBIT, but GLDM alone has 18.6% volatility. So you would think we're adding the returns, you should add the risk. If you take the 47 plus the 87, you're at about like 65. We are not at a 65 standard deviation. We are at 52, right? And that's the beauty of the diversification between these two assets. So it is slightly more volatile than just Bitcoin alone, but not by any substantial amount at all. It's 52 to 47 and a half.
In terms of the stock market right now, we are basically a little bit less than at all-time highs. So I want to know your thoughts on Bitcoin right now, on gold right now, the case for them right now in the next 1 year and even in the next 5 years for investors.
Yeah, I hate to sound like a broken record, but the case is our deficits. We just keep spending, and so money, when it's printed, needs to find a way to end somewhere, and it really comes down to the supply and demand. So I do think that, you know, we've seen a really good run in Bitcoin here. I don't think it's necessarily over in the short run. I think we can go much higher here, and there's a lot more adoption from the institutional world. And at some point, you know, from the financial advisor community, it becomes a risk to not have any Bitcoin, right? It is now a top 10 asset in the world in terms of its size. If you look at all stocks, commodities, this and that, it's a top 10 asset in the world. It's not an asset that can be ignored anymore. So I think people see these returns and get a little bit worried. And that's why we talked earlier, always dollar cost average in with any of these volatile assets, including the equities in your portfolio. You should never just full port the S&P 500 on one given day. But no, these are the assets that you have to own. There's subsets of the equity market that will do well. But I think that the scarcity profile of these things has just really started to kick in on the price level. You know, gold never really moved like this in the past. And if you think about what we talked about from when we went off the gold standard, there was like gold while we were on the gold standard to some level, there was gold after the gold standard, and then there's gold when we just kind of broke the system and just said, let's just go just crazy on debt. The entire developed world is, and the emerging market world as well, just kind of drunk on their own country's debt. We're in a weird phenomenon right now. Like if you look, not to get too nerdy, but if you look at like credit spreads and fixed income, like they're really tight. There's just not enough credit to go out there. That's because all the printing is actually coming from the government side. Like we're used to the Fed solving crises of companies being drunk on debt, but not necessarily the government being drunk on debt. And so again, that's why the most dangerous words on Wall Street is this time is different. This time actually is different because we are not really acting and looking like the developed nation leader of the world country that we have been in the past. You know, in the pullbacks in April, you saw both stocks and bonds and the dollar go down at once. Historically, that really only happens to emerging market economies. So again, until we stop looking more and more like an emerging market economy, from the solvency of our government, Bitcoin and gold are still really the place to be. I think you could argue, biotech and genome is interesting as well. You're just looking for any areas of growth that have been depreciated over the last 5 years. I think you can trade treasuries like an asset. I think anytime you see the 30-year go anywhere north of like 5.5, creeping up to 6, it can be an interesting trade for a little period of time, but that's not a buy and hold. And so if you're talking about buy and hold assets, like I truly believe it's stocks, it's Bitcoin and gold should be the pillars of your portfolio that you build around.
I know a ton of ETF issuers that hold their own products. So do you hold BTGD? And if so, why? And if not, why?
Oh, of course I hold my own products. So I definitely own BTGD in my IRA accounts. And that's because I believe all portfolios should have some level of structural leverage built into them with diversification. That doesn't necessarily mean you need over 100% equities in your portfolio, but that means that you can get your 90 to 100% equities in, like, for example, an IRA portfolio and get that diversification around it. You shouldn't probably stop at just Bitcoin and gold. You should look at some alternatives, some hedge fund like strategies, maybe even some treasuries. Again, it's not about just that asset's performance, about how it counteracts with every other asset in your portfolio. So these stacked ETFs are good institutional tools to allow you to achieve this institutional like leverage and diversification.
Give me 3 reasons why your clients and even investors in BTGD love their ETF of this one by Quantify Funds.
Gosh, we have a 1.76 Sharpe ratio since inception. I think that's one of the best performing ETFs since the election. So most of our volatility has come from the upside. We really didn't show much more beta on the downside in the tantrum during tariffs. And even like a day like today on August 1st, when the market's pulling back, last I checked, we were actually positive because gold was outperforming Bitcoin. And a perfect example how on a volatile day, these assets can still diversify your portfolio.
The stock market as a whole. So we're talking about the S&P 500 index. How will BTGD perform in a rising equity market and also a bear market or some sort of market pullback? Because I know that this product, like I said before, is a long-term buy and hold product for investors and also that diversifier for investors. So some people might want to know, I guess, a prediction, not financial advice. This is not financial advice, but how will your ETF perform in a rising equity market and a downward equity market?
Awesome question. Again, not financial advice, but Bitcoin does continue to have some characteristics that resemble equities. I think it's less correlation to equities, but more correlation to the money supply. And I think given where we are with equities, it's very fair to assume that continued increase in the money supply will affect Bitcoin at a greater level than it will affect equities, right? So that means that we should actually be able to outperform on the upward side, on the upside of the market, equities rallying further, because I think we are a better tool, better asset class that will perform better to increases in money supply than just stocks alone, especially given where levels of PE ratios are, et cetera, versus historical norms. And then on the drawdown, obviously we will still have some beta from the Bitcoin side, but gold will buffer that somewhat, and has proven to be a diversifier. When equities have 15% drawdowns, gold has very, very strong performance, similar to how it does when Bitcoin has drawdown. So we would anticipate that gold would hold up very well in that position. But again, we do have a 50 standard deviation product here. So there will be some volatility from Bitcoin. So I won't say we won't have no drawdowns, but what will have a bigger drawdown, Bitcoin or stocks during a full pullback? I would say it really depends on what's the source of the volatility. If it's driven from economic reasons, then I actually could argue that Bitcoin might have a more muted drawdown than equities. But if it's driven from any issues in the crypto market or anything involving crypto treasury companies, then I think Bitcoin might have a little more volatility than the broad equity position. So I feel like I keep answering your questions with like more questions, but hopefully you get something out of that.
Yeah, I know a lot of my viewers email me like my thoughts on Bitcoin, my thoughts on gold, and I'd say like having you here is super valuable because you have a product that has Bitcoin and gold, and you have laid out so much insights throughout this whole video. My next question is, in terms of like allocation, we've seen financial advisors say hold about 1% up to 5% of your portfolio into Bitcoin. We've seen Ray Dalio have about 5 to 10% to gold. People have more exposure to gold than Bitcoin. So in terms of allocating an ETF with gold and Bitcoin or just them by themselves, what kind of allocation should investors think about?
Yeah, again, not financial advice, but I think a 5 to 10% allocation to Bitcoin and a 5 to 10% allocation to gold is definitely warranted in your portfolio. And then why you quickly see why you have this math problem, like, well, wait a minute, I can have like 10 to 20% in Bitcoin and gold. Like, how do I put that in my portfolio when I want to have the majority of my assets in stocks, and this is a very good way for you to do that without sacrificing any beta that you want to get from your equity portfolio. Does that make sense?
Yeah, that makes sense because I'm actually in the market for a Bitcoin ETF, but when I reached out to you, you have gold in it. And so I had that same problem of, okay, if I want to have 5% to Bitcoin and 5% of gold, like that takes up 10% of the portfolio. Like I want to have less, but still get that exposure. So BTGD is that ETF that kind of solves that issues for investors, makes it super simple. And of course, the performance says it all in itself. What is one thing you think investors are getting wrong about BTGD?
Come across so many investors who don't totally understand that it is a leverage ETF. So I think some investors don't understand it at first glance. And I think that's just as we grow the awareness of what like stacking different assets are in an ETF wrapper, that will erode with time. But no, I think the people who have found this ETF have been big believers of it. They've been rewarded with really strong returns as well. So honestly, I think it's just we're about a 9-month-old firm and we're just getting the word out. We crossed $52 million on BTGD this week. And so I think we just need to continue to get the eyeballs out and meet and talk with amazing individuals such as yourself on this fantastic program and spread the good word.
What do you think makes Quantify Funds so special and unique versus other ETF issuers?
Yeah, we're building institutional quality leverage tools that put you on par with how institutions are allocating without forcing you to do the active rebalancing every single day of owning traditional leverage ETFs, right? You need some form of leverage in your portfolio if you are going to have more than 70, 80% of your assets in equities, right? Because you're going to just have to squeeze your diversification into just such a small portion of your portfolio. Finding a structural way to do that, such as BTGD, can add a lot of benefits and diversification down, like for your overall portfolio. I would say I think a lot of people in the income world focus so much on their income. I always question why so many young individuals are so worried about stacking income now versus like trying to grow the assets, which will come with just even higher level of income in the future. So I do think this is also a very good vehicle that, if you are on that income train and you're trying to find unique assets to drip into, I think this might actually be a very good drip for you. Because again, you're dripping into Bitcoin plus gold. You don't have to worry about the MNAV of a treasury company and what the actual value is and what share issuance is going to be. And so maybe the little bit of added risk you put on top of Bitcoin actually is gold, as opposed to a treasury company that has a lot of benefits into how it's structured and the potential for that, but has caused a lot of headaches as of late.
Common mistake you see investors make that maybe are Bitcoin bulls or that are gold ETF lovers?
Oh my gosh, that they want to, especially the boomers want to fight on Bitcoin versus gold. I like to think of this ETF as like Peter Schiff and Michael Saylor had a baby. It would be BTGD. And they're so busy fighting with each other, they don't see the similarities between the two. And I think that's the part that I didn't anticipate would be such a struggle, is that the purists on the Bitcoin and the purists on the gold side, they don't see the similarities. And every day I feel like the similarities get more and more obvious to the overall world, just because of how these assets are performing and the value that they're providing in your portfolio. So I'd say stop fighting on Bitcoin or gold and just realize that, like, you could say what you want about cryptos, you could say what you want about NFTs, things of that sort, but a true scarcity asset like Bitcoin is just much more like gold than it is like any other cryptocurrency out there.
I know so many investors who have millions in Bitcoin. Maybe they don't have any gold, or they are not thinking about gold to add in their portfolio. And my question is, like, what are some tips or some words of wisdom that you might give to investors who are maybe all in Bitcoin, or maybe they don't have equity exposure, or should I say any exposure to gold or Bitcoin yet, because this is like a newer, I guess, asset class, not newer, but some people aren't ready to dip their toes into crypto, maybe like myself, but maybe I am soon. And I know some people have gold and love it, but maybe they don't have as much exposure to Bitcoin. Like there's so many questions they ask, but
Let's say you're someone who just had Bitcoin. Like, first off, congratulations. That's been the asset class to hold for a long period of time. But to anticipate, further rallies with no volatility is somewhat irrational. I actually heard an economist say this once. You have an asset that went from 1 cent to $100,000, right? That's so many decimal points that it moved. The likelihood that it will move back 1 to 1.5 decimal points on its way to being $1 million asset is really, really high, right? And I'm not saying that's going to happen anytime in the near future, but that means that's like a 70, 80% drawdown. Like, this is a very volatile asset. To anticipate that this thing will never have a volatility moment of like greater than 50% is irrational. And just good portfolio management would lead you to diversify a little bit to those other two. And again, BTGD gives you an option of doing so without sacrificing that Bitcoin allocation.
any last words of wisdom, or maybe some just the last words, because I know some ETF issuers behind the scenes have told me that your ETF is super unique and that it's wonderful. I'm not going to say who, and I know some investors also actually hold BTGD. Any last thoughts?
First off, thank you so much for your time. This is such an amazing show. Anyone watching, please follow us, Quantify Funds, on Twitter, quantifyfunds.com. Sign up to our contact list and we'll send you our future research papers. And what I would say is, I think there's so much amazing innovation happening from the entire landscape in the ETF space, particularly some of the newest and small and nimble issuers. So whoever that individual is, I likely know him and have similar respects for his company. I've said this for years because, again, I spent 11 years at Tidal before this. And so we are on the meats and potato sides of both portfolio management and construction of ETFs. It's the new issuers who oftentimes bring the best idea that's best for this market, because if it was so proven, it wouldn't be that best idea, right? And if BlackRock thought they could launch something and get $500 million in 6 months, like it likely, Bitcoin is the shining difference to that statement there, right? Most of the times you don't actually see that. You see a lot of the innovation coming from the small issuers. The same thing happened when you saw duration go through the roof and yields spike in fixed income in 2022. You saw a lot of the small issuers they had the negative duration products that did very well, that actually protected your portfolio. It's always been the small issuers that are really pushing the needle and innovating. So I just want to commend you and thank you for putting on such an amazing professional show and doing such a good deep dive, because I think this is research that sometimes you don't see even the advisory world doing, because candidly, like, they're gathering assets as opposed to doing high level research, and they're still deciding, do I need Bitcoin, and not really going to any levels beyond that yet. But I think that will all turn with time. So
now, if you guys like this video, please give it a like, because this QQQI did. And don't forget to check out our last interview right here on your screen. I love you guys so much. Crush it in the stock market and take it easy. Peace.